Joby stock up nearly 200% year to date. In most recent news, FAA approval test flying taxis. Joby secured FAA approval with the goal of commercial flights starting in 2025. Simultaneously, they received an additional 100 million in funding from a South Korean telecommunications company, SK Telecom. This is Intrendias. Welcome back to the channel. We are looking at Joby Aviation today, flying drone taxis. Quick summary, the sell rating for us is at 99% strong sell. The main bullet points are exponential stock price growth is unsustainable. In the near term, volume gaps are to be filled in. Most likely, cash burning will leave Joby operating for 2.7 years, assuming cash and operation expense stays the same. And there's also insider selling. So for the people that need the answers quick and are on the go, this is the short, quick summary that this video will go into as to why Intrendias supposes a strong sell on Joby. Not financial advice, but just entertainment for you. So let's get straight into the entertainment and look at their cash and cash investments. Currently at 978 million, we can see a huge dip in the cash and cash equivalents, 66% down. Obviously not the position we want to see because we are in a cash burning business. However, it's important to note that they have a huge short-term investments position of 927 million. So add those two together, makes up 978 million, a pretty good lump of cash Joby has. The operating expense is at 99.7 million for the first quarter in 2023. So that is why most likely we're seeing that huge drop in cash as cash needed to be put to work. Quarter one earnings report was on May 3rd. The SK Telecom 100 million additional funding was on June 29th. So that 100 million is not captured in quarter one. So to add that additional funding, we're looking at 1.078 billion in cash and short-term investments for Joby stock. However, the issue here is the additional 100 million will only last one additional quarter of funding because again, operating expenses is at 99.7 million, which is pretty much the entire 100 million, assuming quarter two will face similar expenses. Therefore, we're going to take $1.078 billion, divide that over the product of 4 times 99.7 million. Again, that 99.7 million operating expense was only for one quarter in 2023. So we're going to multiply that by 4 and we're going to get 2.7 years of operating, assuming the costs and cash stay the same throughout. We are facing a similar situation that we've digested in the Carnival's video. I could also say the same for the Rivian and Space Virgin Galactic video that we covered earlier in the week. The video links to that can be found in the description or the top right corner of the screen with the little information icon. What we covered in the Carnival Cruise Line video was that there are 3 potential situations that I see in the forefront that could happen to CCL that I could also see happening to Joby. First off is dilution of shares. Obviously, operating expense can't just halt. The cash needs to come from somewhere for the company to continue to rapidly grow. There is potential future diluting as it has happened in the past where shares diluted in the past year where the total shares outstanding grew by 11.3%, which is a decent high number. Again, cash has to come from somewhere. We could also see operating income increase dramatically second half of 2023. However, this will most likely not happen because, again, we covered earlier that the goal was commercial flights in 2025. Finally, take on new debt. When I was researching the company, I was surprised to hear that Joby is a debt-free company. And on the quarter release, I Command F for debt, and I did not see any keyword debt. So I was super fascinated that Joby seems to be debt free. I would love to hear what you have to say in the comments because I was quite shocked for a cash burning business to be debt free. So, out of the three options that we see here of what could happen in the future, obviously it's not only three choices, right? Other things can happen, but those are the three things that I could see happening in this rudimentary analysis here. And perhaps Joby will confront new debt since they don't have any on the balance sheet instead of diluting shares. I would be very interested to see what Joby does in attempts to continue operating and keep a healthy balance sheet. Finally, in our analysis, we are looking at insiders selling. Most recent sell is 0703 2023. This is according to 0704 data. So there's potential that more insider trading has happened since then, but we are definitely seeing some insider selling from head of aircraft, CEO, chief architect, and some others in June. So now, why don't we go to the candlestick chart and see what type of trends we can find. We're looking at the Joby stock price movement here, and we are seeing the $3.77 line acting as great support for the stock during 2022 and 2023. We have been seeing huge exponential increase in the stock price here, which honestly, to me, not financial advice, of course, but this definitely seems very unsustainable. Anytime I see anything that looks like an exponential line, definitely something to consider some pullbacks in. Here we are seeing some volume gaps after all this excitement in the movements of the stock. We can see the price could potentially downtrend to 901 or even 699 before potentially any further increase in the stock price. The price of the stock has returned back near the IPO of $10.62. And as of today of recording, July 5th, it's actually surpassed IPO price. So it's very interesting to see what will happen in the near term. Here at Intrendias, I am hypothesizing either a 901 backtrack or a 699 backtrack. So return back to the slides and close out the video. We are seeing Intrendias suppose a strong sell for Joby, supporting a buy at 901 and a strong buy at 699. As of recording today, July 5th, we also see Deutsche Bank adjust Joby Aviation price target to $6 from $4 and maintains a sell price. So seems like one of the big boys also agrees with that $6 mark there. To recap, we are seeing exponential stock price growth, which is unsustainable. Volume gaps may be filled in the short term, meaning downtrends there. Cash burning is at 2.7 years. So Joby will either have to find more funding or dilute stock or take on new debt. And then finally, there is a lot of insider selling happening within Joby. So who knows the company more well than people who run it? So it might not be a terrible idea to copy them. Finally, for the long term, again, with a speculative play like this, it's very hard to articulate where the stock may go. Again, it's quite like swinging for the fences. Obviously, at least to me, yes, air taxis, drones, stuff like that will be in the future. Just like how people would say, oh, planes would never happen. Well, people fly every day now. Um, Same thing with travel. If there's a way to beat LA traffic, if there's a way to beat New York traffic, if there's an easier way to travel than taking the metro, people will demand that. And obviously, it'll start with the rich consumer, but then once technology gets better, more efficient, and has more cost savings, it'll trickle down to the everyday user. So, for the final verdict, long term, we are considering it a sell of 70%, mainly because we will most likely see some large swings to the downside in the short term. It's probably better to have a patient stomach and wait till then to buy. I don't think you want to be a sucker and buy into Joby when the stock is already growing exponentially up 200% year to date when they're still not profitable. So for the long term, for something like this, you will need a strong stomach. Air taxis will be part of the future. Joby can endure new debt as it is a debt-free company currently to continue their high operating expenses. And there is definitely strong investor interest and support, as we saw with the 100 million from SK. So those bullet points there does give it the 30%, but at the end of the day, Intrendias is still considering it a sell in the long term. A speculative stock like this, you may not want to fall in love with it and go long term. Perhaps if you are a long term investor, why not just go to Berkshire Hathaway, let Warren Buffett collect 5% on their huge cash balance sheet and just call it a day, right? So currently a sell for both short and long term here at Intrendias. I hope you enjoyed what you saw in this episode today. If you did, please like the video. It helps us out a lot. And consider subscribing to see our latest and upcoming stock crypto coverage. This has been Intrendias, and I will see you in the next one.